Your finances do not have to be a burden. Many of us crave financial stability, but we're unsure where to start. Let me help you gain financial independence. Today I'll share with you 10 quick and effective tips that will increase your financial stability. If you use these tips in handling your finances, you'll be well on your way to living a financially fit life. Welcome back, everyone, to Financially Fit with Katie. I'm Katie MacDonald, certified financial planner and owner of MacDonald Wealth Management. I am dedicated to being your anchor for a financially fit life. Now, please do not forget to subscribe. That way you will be notified when new content has been uploaded. Now let's jump into today's topic on simple money management tips you can use to increase your financial stability. Hi everyone, welcome back. I wanted to just go through and provide you some quick and effective money management tips that you can use that will get you ahead, so that if making changes to your finances is one of your resolutions, using these tips are going to help to get you to where you're trying to go. So first, set financial goals. This is so important. You want to make sure that you're listing out what are the goals that you're trying to accomplish. I recommend getting a notebook, writing them out, prioritizing them. If any of the goals are larger, also apply some dollar amounts to what those are. This is going to help you stay on track throughout the year as you're building up savings and working towards what these goals are. Next, you want to create a budget. There is a ton of information out online that you can get for budget worksheets. There are also apps available that you can download, that you can link your accounts, that will help you to track your cash flow and then to create a budget. It doesn't matter which one you use. You want to make sure that you find one that you're comfortable using, and make sure that you are setting time either every other week or at least once a month to sit, review your transactions, and go through your budget and see if updates need to be made for the next month. Third, you want to create an emergency savings. As you go through in the prior step where I talk about creating a budget, you want to take a look at what are your overall expenses, those fixed expenses, whether, groceries, your rent. You want to make sure that you can create an emergency savings that is at least going to cover you for 3 months of unexpected loss of income, and you want to build that. So when you get to 3 months, you want to work to 6 months, and you want to get that up. You might start adding in second layers of savings, build that up to 9 months, 12 months. But at a starting point, you want to get to that 3 months. 4, you want to get out of debt. If you are carrying any types of credit card balances, student loans, consumer loans, again, I recommend getting a notebook, list out what your credit card or the loan balances are, what the interest rates are, and what the minimum payments are. And you might want to look up how to create a snowball debt payment strategy. You want to recognize where you're at and implement a plan so that you can get yourself out of debt, because that is going to go a long way in helping you to feel confident within your finances. Next, develop an investment strategy. It does not have to be complicated. You do not have to have a ton of money to start. You just want to start. I recommend if you have a job, if you're in college and you make some income during the summer, or you're just starting out, create a Roth IRA. Set up systematic savings. Even if you can do $25 a month, $50 a month, have that set up, have that invested. And if you're unsure about what types of investments to invest, reach out to a professional, an advisor that can help get you started on that. So again, it doesn't matter the amount, you just want to start. Next, build multiple streams of income. So whether you've got a full-time job or a part-time job, nowadays it's so easy to build, an online, you might call it a hobby job. Maybe, you've got a full-time position, but you've got certain things that you've accumulated that you no longer need. Create an account and try to start selling some of this online and utilize that income to either go towards your emergency savings, or if you're in debt, use it to pay that off. Multiple streams of income will help you as you are moving through your career and where you're going and what those goals. It will help you accomplish them. Next, take advantage of free money. What do I mean by that? If you're working for a company and they have a retirement plan, whether that's a 401k, a 403b, maybe it's a simple IRA, if they're providing you with a company match, so say they're gonna match up to 3% of what you put in, or they'll match, up to 6%. If you're not contributing to that plan, you're basically leaving money on the table. Your employer is including that within what your compensation is. So you absolutely want to make sure that you are taking full advantage and you're not leaving anything on the table. Next, use cash instead of credit. You want to get to a point where you're not, reliant on having heavy credit card bills at the end of the day. By using cash, you want to, again, go back to the step with budgeting. Look at how much you have available. Take out cash each week. By using cash, it is going to make you more mindful about your spending, because you're not just going to swipe a card and say, okay, I'll look at that later. You have to take the money out, and then you've got to think, okay, I have $50 and that's going to cost me $20. Okay, I've got $30 to last me. It'll make you think, is that purchase worth it? It's all about becoming more mindful of what you're doing. Next, you want to spend less than you make. That sounds very easy, but again, it all goes into planning. You need to know your numbers. You need to have a budget. You need to know how much income is coming in after tax, what is actually deposited in your accounts, and then how much you're spending. So important. You cannot get ahead or build a firm foundation unless you are spending less than what you make, and by actually knowing what those numbers are. And last but not least, and this is absolutely one of my favorites, I utilize this with my clients, automate your savings. What do I mean by that? You want to make sure, whether it's coming directly out of your pay, reach out to your HR department. Instead of having all of your check deposited into your checking account, create a savings account. I love the Capital One account, Capital One 360s, or the INGs. Ones that are kind of out of sight. You still have access to it, but it's not something that you can immediately access. It takes a day or two in order to transfer money. So it's out of sight. It will allow you to really build your emergency savings. Have the money come directly out of your pay. That way, you're able to budget on the money that is then flowing into your checking account. You will start to see your savings build quicker than you would have thought. If you're not comfortable, if you don't have access to do that, then make sure you're setting up automatic transfers every month to come out of your checking account directly into the savings. You want it done so that you don't have to think about it. So again, automating your savings will 100% start to allow you to build that emergency savings. It's going to build that firm foundation so that you can start to, progress into reaching those goals that you have. So I hope that, one or all of these tips will allow you to reach your goals this year so that you can feel financially confident and that you don't feel stressed about where you're at with your finances. If you have any questions, if there's anything that I can do, please reach out to me. My contact information is listed in the description box. Also, make sure that you're following us, Financially Fit with Katie, on Instagram, as we are posting all kinds of content out on there as well. So until next time, everyone, stay safe, be well, bye.